Now let us discuss the other issues affecting the audit report or the opinion that we will issue in our audit report. So first, we have going concern consideration. So we have introduced this last time in our module related to completing the audit. So in case of going concern, we mentioned that uh, this is a very pervasive assumption, no, on the preparation of the financial statements by our clients. So in a way that if it's not appropriate for our client to use the going concern assumption, then there is a serious issue in their financial statements. So because there will be a significant difference between a financial statement that is prepared under going concern basis and a financial statement that is prepared not in going concern basis, also known as a liquidating concern basis. So that is why as auditor, we have to evaluate whether we have obtained sufficient and appropriate evidence regarding, and we shall conclude on appropriateness of the entity's use of going concern basis of accounting in the preparation of their financial statements. Okay? So because, for example, the company has encountered financial difficulty, so giving rise to uh, reasons to substantially doubt, no, the entity's ability to continue as a going concern. So therefore, we have to evaluate whether it's still appropriate for the client to use the going concern assumption. So because otherwise, the client will have to use a different basis of uh, assumption, no, in preparing their financial statements. So which I mentioned, an example of which is the liquidating concern basis. So because if the entity will cease in operation in the foreseeable future in the next 12 months. So usually our assessment of the going concern assumption on our client extend up to 12 months after their financial reporting date or after their balance sheet date. So if there's a serious problem that the company is facing, and it's highly likely, no, that they will cease operating, so they should not present their financial statement using the going concern assumption. So normally they will present their financial statement showing the liabilities in the order of priority, so including the assets expected to settle those liabilities. So that is an example of financial statements prepared or presented under liquidating concern, which is very much different from a financial statements prepared under going concern basis. So under going concern, it's still appropriate for the company to present accruals and deferrals, depreciation, allocation. So those assumptions will no longer apply if the company is not appropriate, or if the company is facing a problem and it's not appropriate for them to use the going concern assumption anymore. So in the completing the audit, we discuss some examples of indicators wherein our client uh, that provide evidence that our client is encountering some going concern issues or problem. Like for example, financial events or condition, like let's say they are in a net liability position already, their liabilities already exceed their assets, or they are experiencing recurring losses in the recent years and there's no prospect of them recovering anytime soon, or it might relate to their operating event or condition, like for example, loss of a key management personnel, or loss of a major customer, or loss of a major market. So those are example of going concern issues affecting the operations, and also other events and condition, like for example, non-compliance, no, with laws and regulation, or suddenly the government declared the business of our client as illegal, no, for example, let's say in the first phase of a ride sharing platform, what happened is that let's say the government declared, no, that ride sharing platform will be illegal in this country. Okay, so in that case, that could affect the business of our client, which is operating in that business model. So those are some of the things that we have to consider in evaluating now whether our entity, or it's still appropriate for our client to use the going concern assumption. Okay? Now, in other cases, clients can still continue in a going concern manner, so meaning to say they can still operate in the foreseeable future. However, there are cases or situation that might bring uncertainty to their operation. So let's say, for example, the entity is involved in a huge litigation. So wherein if they lose, they will be made to pay significant amount of money. So however, that that might or might not allow the entity to continue an operation. So meaning there's a chance that it will create a dent on the entity's operation, but they still survive. Or there is also a chance that it may cast doubt on the entity's ability to continue as a going concern. We call that material uncertainty. Okay? Now, if we conclude that the management use of going concern is still appropriate, so meaning to say they can still continue to operate, so even if that uncertainty happened, so we have to determine whether their financial statements now appropriately disclose the principal events and conditions and their plans how to deal with those material uncertainty. Okay, and they have also to disclose that there is a material uncertainty related to events and conditions that could cast doubt on the entity's ability to continue as a going concern. So they should include this in the notes to financial statement in case there is a material uncertainty, although the company is expected to be going concern, still to be going concern, so regardless of this uncertainty. So there should be additional explanation their financial statements now related to that material uncertainty. So in this case, we will still issue unmodified opinion, clean opinion, so provided that the client disclose the information in their notes to financial statements. Now, if adequate disclosure about that material uncertainty is made by the client in their financial statement, as mentioned, we will still issue unmodified opinion. However, there's an additional explanatory paragraph that we will include in our audit report. Now, we call it MURGC, or Material Uncertainty Related to Going Concern. So, to draw the attention of the users of the financial statement to the specific note where the client discusses that related material uncertainty. Okay, and we also state that this event and condition indicate that this material uncertainty can cast significant doubt on the entity's ability to continue as a going concern. However, our opinion is not modified. So in this case, because after all, an adequate disclosure is made by our client. So this is an example of material uncertainty related to going concern. So for example, we include this paragraph in our audit report. So we draw attention to note 6. So for example, the client explains the nature of material uncertainty in this note disclosure in their financial statement. So we draw attention to note 6 in the financial statement, so which indicate that the company incurred net loss of this much during the year ended December 31, 2021. And as of that date, the company's current liability already exceeded its total asset by this much. So as stated in Note 6, these events and condition, along with other matters set forth in the same note, indicate that a material uncertainty exists that may cast doubt on the entity's ability to continue as a going concern. Our opinion is not modified of this matter. We still issue unmodified opinion or unqualified opinion. Okay? Now, however, the situation where we need to include MURGC or material uncertainty related to going concern is a matter of judgment of the auditor. So we really have to evaluate whether it's still appropriate for the client to continue as a going concern, and if the entity is still a going concern company, so whether there's an existence of material uncertainty or not. So because including this section in our audit report can really affect the outlook of the users. So sometimes the problem with this section is that it's being considered a self-fulfilling prophecy. Okay, so meaning to say that if we include this statement, then the stakeholders, for example, the investors, the creditors, could pull out their support from our client. So and therefore, it will allow the entity to succumb, or to fail instead of recovering. So that is why we have to use a significant amount of judgment to decide whether we'll have to include this section in our report or not. Okay? So because if we omit this statement where it is required and something happened to the company, then that might affect our responsibility as auditor. So therefore, it's a really difficult decision on the part of the auditor, especially when reporting about going concern of our client. Okay? Now, let's say the client faces a material uncertainty. However, the client did not make appropriate disclosure in their financial statement. And therefore, it equates not to misstatement in the financial statement. So because that is inadequate disclosure. So inadequate disclosures mean material misstatement. So our opinion will be affected. It will either be qualified or adverse opinion. And in our basis for qualified or adverse opinion section, we will state that there is a material uncertainty exists that may cast significant doubt on the entity's ability to continue as a going concern, but the financial statements of our client did not adequately disclose this matter. So that's how we will include it in our audit report. So earlier we discussed a situation wherein it's appropriate for our client to use going concern. However, there is a material uncertainty. In this case, if going concern assumption is not appropriate in the first place, there's a significant amount of evidence that dictates that the client will cease operation in the next 12 months from the reporting date or from the balance sheet date, and yet the client used going concern assumption in their financial statement, then we'll have to express adverse opinion. Okay, so our opinion will be or should be adverse. Okay, so because remember, if it's not appropriate to use going concern assumption, it would have a significant impact on the amounts and disclosures in the financial statements. So there's no middle ground. We cannot issue qualified opinion in case the client is incorrect in using the going concern assumption. So the opinion should be adverse. So okay, let's summarize the consideration related to going concern. So we obtain sufficient and appropriate evidence. So to conclude on the appropriateness of the client's use of going concern assumption. So in case based on the evidence that we have obtained, it's appropriate for our client to use the going concern assumption and we have not identified any material uncertainty, then there's no problem. So we issue unmodified opinion. So with respect to the issue of going concern. Okay? Now, if the client is if it is appropriate for our client rather to use going concern assumption, but there is a material uncertainty that could cast doubt on the entity's ability to continue as a going concern, the next step is to evaluate the adequacy of our client's disclosure. If it's adequately disclosed in the financial statements, in the notes to financial statement, we will still issue unmodified opinion. Okay, because there's an adequate disclosure. However, we will add a section called MURGC, material uncertainty related to going concern. So to draw the attention of the users to the specific note where the discussion on that material uncertainty is included. Now, if the client refuses to disclose that material uncertainty, then that equates to material misstatement. And if there is material misstatement, our opinion would be either qualified or adverse. So depending on the pervasiveness of the matter. So if it's material, then we issue qualified opinion. So if it's material and pervasive, we issue adverse opinion. Now finally, if in the first place, the use of going concern is inappropriate, but the client still use going concern assumption in preparing their financial statement instead of liquidating concern, and in that case, we'll have to issue adverse opinion. Okay, so again, the only opinion available here is adverse if the use of going concern assumption is inappropriate. Next, another issue that affects our audit report is about the comparative information. So when we say comparative information, these are amounts and disclosures included in the financial statements related to prior period in accordance with the applicable financial reporting framework. So for example, in our accounting standard PS number 1, presentation of financial statements, so there is a requirement to provide the comparative information at least for 1 year, so with respect to the current period presented in the financial statements. So if you present, for example, figures for 2021, so you should present figures also and disclosures related to 2020, no, the prior period. And also there are instances wherein we need to present a specific prior period. So depending on the condition set forth by our accounting standard. Like for example, if let's say the client with a restatement or a change in accounting policy, so there's a requirement to present, for example, a third balance sheet. So that is why those information from the prior period, they are what we consider as a comparative information. And we have two types: corresponding figures and comparative financial statements. So we'll discuss one by one, starting with corresponding figures. So when we say corresponding figures, so corresponding figures are included as integral part of the current period information or current period financial statements rather, and are intended to be read only in relation to the amounts and other disclosures relating to current period figures. Okay? So therefore, for corresponding figures, the level of detail is dictated primarily by its relevance to the current period figures. So it's not necessary to include all the information related to prior period as the same level of information presented in the current period. So only those that are integral to the current period figures. So with respect to reporting, so here are the rules that we have to remember. If the prior period audit report is modified, so because the corresponding figures contain material misstatement and the matter is still unresolved, then we also have to modify the current audit opinion. So by the way, when reporting on corresponding figures, we only report on the current year. So our report or opinion on the current year already covers our opinion with respect to the corresponding figure, even though it's from prior period or the information pertain to prior period. Okay? So that's why if there's something wrong with the prior period information in the corresponding figure, then we'll have to modify our opinion for the current period. Now, in case the prior period is audited by another auditor, a different auditor, a predecessor auditor, so we have to state that fact in an other matter paragraph. So we will mention that the financial statements for the previous period was audited by another auditor who expressed this type of opinion as of this date. Okay, so we have to include that in other matter paragraph. Because remember, other matter paragraph, right? So we include other matter paragraph for information that are related to our responsibility in audit. Okay, the conduct of our audit or about the audit report. Okay, so as contrast in an emphasis of matter paragraph. So similarly, if the prior period financial statement is not audited, so the corresponding figure is presented in the current period figure, so we have to explain that also included information in other matter paragraph stating that the prior period is unaudited. However, it will not relieve us on our responsibility to audit what we call the opening balances. So we still have to audit the opening balances, no, regardless. So whether the prior period is audited or unaudited. So another type of comparative information is what we call corresponding financial statements. So comparative financial statements are included for comparison with the financial statements. So therefore, the detail presented in comparative financial statements would be the same as with that of the statement for the current period. So unlike in corresponding figures, we only present what is integral in understanding the current period figure. So in this case, whatever is presented in the current period financial statement would also be included, no, as reference or comparison with respect to prior period. And therefore, when we express opinion on comparative financial statements, if we audit the financial statement, we refer them both, or the periods are referred both in the audit opinion. So that is why here, as mentioned, the auditor's opinions shall refer to each period for which the financial statements are presented and on which an audit opinion is expressed. So that is why in case we have previously issued an opinion with different type of opinion, or we have previously issued an audit report rather with a different type of audit opinion, then we have to discuss in other matter paragraph the substantive reason for the different opinion. So because in comparative financial statements, so let's say we have presented comparative financial statement in 2022, the 2021, or even 2020 and 2019. So then we have to include in our audit report the figures that are being presented in the current financial statement. So our opinion will not only be related to the current period but also for the prior period presented related to the comparative financial statements. So if there is a different opinion expressed in the prior report, so we have to explain it. Now, like for example, in 2020, you express a modified opinion. And then in 2021, the 2020 figures were presented as comparative financial statements to 2021 figure. So, and then let's say you issued an unmodified opinion on 2021. So you mentioned in your report, so my opinion in 2021 and 2020 financial statements are unmodified. But the problem is that last year, 2020, you issued a report containing a modified opinion on 2020 financial statements. And yet now, in 2021 FS, you are issuing a report with a modified opinion on both 2021 and 2020. So there is a discrepancy on 2020 opinion. So in the current period, you are saying that it is unmodified, but when you issued your report last year, you said that it is modified. So you'll have to explain that in other matter paragraph. For example, the matter was already resolved. So therefore, you will include that in your other matter paragraph. So the reason why you issued modified opinion in 2020 report is that there's an unresolved matter which was resolved in the current period. Now for the summary. So let us contrast corresponding figures from comparative FS. So we said earlier when we talk about corresponding figures, so they are integral part of the current period financial statements and are intended to be read only in conjunction with the current period figures. And the level of detail here is affected by its relevance to the current period figures. So unlike in comparative FS, so it is included primarily for comparison with the financial statements of the current period. So but if we audit it, so we will refer both both periods in our audit opinion. And in here in comparative FS, so the level of information is comparable with that of the financial statements of the current period. So like for example, let's say you need an information from prior period related to, let's say, retained earnings or inventory only. So in that case, you will use corresponding figure, and you will only include that information, let's say related to RE or inventory, as corresponding figure because those are the only information from prior period that is relevant to understanding the current period accounts that was mentioned. Okay, unlike in comparative financial statement, whatever information you presented for the current year for all accounts and disclosure, so there should be a similar information presented in the prior period. So for corresponding figures, when we issue our audit opinion or our audit report, we only refer to the current period. So for example, we have expressed an opinion on December 31, 2021 financial statements. Okay? In case there is a corresponding figure, let's say coming from prior year, so that the opinion on that prior year information is already included in the opinion for 2021. Okay, so you will no longer refer it separately in your audit report. But for comparative FS, so you have to refer to both period in your opinion. So therefore, if you have included the 2020 comparative financial statements, so you will both mention 2021 and 2022 in 2021 and 2020 in your audit report. So that's the difference. So here in corresponding figure, you include information from the prior year. So let's say in 2020 or in 2019 or in any other prior period, you will not refer those years in your audit opinion. Only 2021. Okay, so this audit opinion is for 2021. So that is already understood to cover your opinion for the corresponding figure. But for comparative FS, if you include 2020 comparative FS together with 2021 current figure, so you will refer both in your audit opinion. So this opinion is for December 31, 2021 and 2020. So that's how you will word your audit opinion. So this is the summary of the reporting requirements for corresponding figure and comparative FS we discussed earlier. So if your opinion in prior period is modified and the matter is still unresolved, since you are only reporting for the current year 2021, that is still considered as unresolved as well. So because the information from the corresponding figure, let's say 2020, is an integral part of 2021 figures. So you'll also have to modify your 2021 even if the misstatement or the discrepancy pertain to the prior year corresponding figure. Okay? Now, if the prior period is audited by another auditor, a predecessor auditor, so you have to include or state that fact in your other matter paragraph. So similarly, if the financial statement from prior period is unaudited, so you have to include that also in your other matter paragraph section. So for comparative FS, so because you issue or you refer in your opinion the previous period in your current report, so there's a situation wherein there could be a different opinion that you issue in the current version and in the previous version, as discussed earlier. And if there will be a difference, then you have to explain the substantive reason through other matter paragraph. Okay, so this is a summary of the reporting requirements with respect to comparative information.